Markets had expected the Fed's quarter-point hike. Powell's warnings on the economy caught them off guard. What you need to know today. The U.S. Federal Reserve hiked interest rates by 0.25 percentage points, bringing it to a target range of 4.75% to 5%. But the increases might stop soon. Most Fed members kept their rate forecast for 2023 unchanged, signaling there'd be just one more hike this year before the Fed pauses. Fed officials unanimously agreed to increase rates. But at the post-meeting press conference, Fed Chair Jerome Powell admitted the committee considered pausing hikes because events in the banking system over the past 2 weeks are likely to result in tighter credit conditions. Asked by a senator if Treasury is considering guaranteeing all bank deposits without congressional approval, Treasury Secretary Janet Yellen said it is not. U.S. stocks tumbled Wednesday. All major indexes fell about 1.6 on comments by Powell and Yellen. Asia-Pacific markets were mixed Thursday. Japan's Topix slid 0.24%, dragged down by Japanese banks and financials. On the other hand, Hong Kong's Hang Seng Index rose 1.39%, helped by Tencent's 6.85% jump as the tech giant reported better-than-expected quarterly revenue. Praga Mestop surged 35.24% on the news that the company's had its first profitable quarter in 2 years. But analysts are warning investors not to jump into the stock because it's still facing longer-term headwinds. The bottom line. The last few Federal Open Markets Committee meetings have followed a pattern. The central bank would take a hawkish stance and hike rates aggressively, spooking markets. Then Powell's comments at the press conference would suit investors, who'd focus on his dovish remarks. This time, Powell flipped the script. Markets had expected a hike of 25 basis points, and that's what they got. Being right contributes to a sense of certainty, so all 3 major indexes actually rose after the Fed's announcement. Indeed, Quincy Crosby, chief global strategist of LPL Financial, noted markets are responding well to the expected 25 basis points rate hike. Then Powell started speaking. At first, his reassurances that the banking system is sound and resilient continued soothing markets. Then Powell started talking about tighter credit conditions for households and businesses that could easily have a significant macroeconomic effect. Worse, these conditions were not reflected in stock indexes since they don't necessarily capture lending conditions. As if trying to prove Powell wrong, markets began sliding about an hour after Powell's speech and couldn't arrest their decline. By the end of the day, the Dow Jones Industrial Average lost 1.63%, the S&P 500 fell 1.65%, and the Nasdaq Composite sank 1.6%. As if trying to prove Powell wrong, markets began sliding about an hour after Powell's speech and couldn't arrest their decline. By the end of the day, the Dow Jones Industrial Average lost 1.63%, the S&P 500 fell 1.65%, and the Nasdaq Composite sank 1.6%. The good news is that the Fed forecast it'll hike interest rates only one more time, probably by another 25 basis points before pausing. A cut, however, is not on the table if Powell is to be believed. Amid the ongoing banking turmoil, coupled with the Fed's warning about the broader economy, it might be better for investors not to fight the Fed.